Thank you very much, and good morning, everybody. Thank you, Dr. Akhtar and Deputy Governor Kamil, and to the entire State Bank of Pakistan team that I was privileged to meet with yesterday, and Raast, to you, where you and your team at Carandas, thank you so much. And especially to all of the bankers in the room that I haven't had a chance to meet with personally yet, I just want to assure you that although I've spent most of my career focused on payments narrowly, I did in fact start out as a banker, including lending money, and so I do appreciate things from a banker's point of view as well. I am going to talk today about the future of digital payments in Pakistan, and I will declare my hand. I think the future of digital payments in Pakistan is Raast. But before I get to that, I want to set a little bit of context. And I'm going to talk a bit about the United States. We are going to, next month, we are going to launch our instant payment system run by our central bank called FedNow. Some of us think it should be called Fed Finally. It is, as far as I can tell, a copy of Raast. It is very, very similar to what you have launched 2 years ago. And there's some, from my point of view, there's some interesting history of it. As a consultant to the Fed, I think it was in 2014, I was asked to facilitate a meeting of large and small banks. There were about 15 of them in a 2-day session to talk about faster payments in the U.S. And I'll never forget, during the course of this 2-day meeting, the head of payments of the second largest bank in the United States stood up and he looked at me across the room and he said, "Carol, nobody needs money right away." And so that was the beginning of the discussion in the United States. And several years later, in 2019, right before the pandemic, I was asked to testify in front of Congress on the issue of whether or not the Federal Reserve should be involved, should they start a new faster payment system. Because at that time, we already had several private sector instant payment systems, as well as a bank-owned ISO 222 clearinghouse instant payment system operating. And the apparent debate was about competition in the marketplace. Should the central bank compete with these other initiatives? But I think the actual discussion was about something else that wasn't as on the surface. And if you look historically at the United States, major payment systems that affected day-to-day payment behavior, what the World Bank would call retail payment behavior of both consumers and businesses on a day-to-day basis. There really have been two major payment systems: the checking system and the card system. And it was interesting, I think it was in 2013 or something like that, when the Federal Reserve Bank celebrated their 100th year of existence. A lot of people wrote about it, and one of the things I found interesting was people wrote about how the checking system, which was basically stewarded, developed and run by the central bank, really was one of the primary enablers of the growth of the American economy in the 20th century. The fact that it worked on an interstate basis, and this was really critical, the fact that it worked without interchange, that banks throughout the country accepted each other's checks on a par basis. That was because the Federal Reserve strong-armed banks around the country, insisting they didn't have the power to do it by law or by regulation, but they insisted, and they made that happen. And through decades, they handled the checking system and kept processing systems costs low, and made it a highly efficient payment system. So they operated that system as a public good. And it was that. It was good for the American economy. Now, consider for a moment the card system. The card system is also a great success for America, highly adopted, highly efficient, much used, but it was not operated as a public good. I was part of the card system, and I know it very well. I understand the economics of the card system very well. As a staffer at Visa International, I was often at board meetings of, where major decisions were made about how the system was run. And the central bank was never in those rooms, even as an observer. They were not a participant in that payment system. And those systems were operated purely and simply for the profit of the financial institutions. And that model worked very well for that purpose. It's been described as being the most profitable product ever in the history of banking. And, if you set out to do that, it does it very well. But my personal belief is that when it came to faster payments, the Central Bank of the United States decided, you know what? We don't want that model. We want the model that looks more like the checking system. We want a model that operates more for the public good and the American economy. So next month we launch FedNow. Feel free to consider it a copy of the Raast system, and we'll see how it goes. So let's turn our attention to Raast, and I'm told that this clicker will work. In my opinion, congratulations. You have built the right system. You have, built a great real-time payment system based on international standards, real-time, immediate settlement, ready for multiple use cases, works with banks and non-banks. It checks all of the boxes. And the core of the system is up and running. You've got it. Secondly, I believe the market is there. What do I mean by that? I mean that you've got payers and payees who are going to want to use this system. You have evidence, you already have successful users of your existing online payment systems in the market. Plus, we have evidence from countries around the world, countries that look like yours and other countries, showing that if you give products to these people, they will use them. People want to pay and be paid in easy and convenient ways. So the market is there. Now, what do I mean by these little boxes down here? What I mean is, think about what kind of a development are you facing here to make this happen? What if you've got the market and you've got the product? Are you facing something that looks more like the internet, making the internet happen? Or are you facing something that looks more like making clean energy happen? I thought of this metaphor because I have a lot of friends in the clean energy business. And it's a lot more like the internet, right? You don't have to do the equivalent of building wind turbines all over the place, right? It's a much easier job. You might think it's hard, and I'm not saying it's the easiest thing in the world, But as we'll see, it's not as hard as building wind turbines all over the place, right? It's really quite doable. I see some frowns in the audience. There's still problems. There's things you're going to have to do hard. Yes, Ohio, I know. There are lots of problems. There's things you're going to have to work on. But it's not as hard as it could be. You don't have to realize that all of those chargers you installed all over California only work with Teslas, and you have to rebuild them all to have them work with the other cars, you know. It really isn't too bad. Now, so what do you have to do? Do you need to just, you know, stand back and watch? I wanted to make one more point about the market being there. You hear a lot of pessimism when I say the market is there. People will say, oh, you know, my grandmother is never going to use this, or the people in my village are never going to use this, or the market on the corner isn't going to accept electronic payments. And that may be true. But I encourage you to think positively and to think about the positive side of the market and not the negative. Because we'll look at some other numbers in a moment. The success here is to go after, to use an overused expression, the low-hanging fruit. You look at the market that is willing to adopt. You don't try to solve the most difficult problems, because the market is large enough that if you go after the users that are ready to adopt, you can find some success. Okay. Now, you can look at many, I just grabbed these to show. There are countries all around the world where you are seeing rapid growth in faster payments. And I was asked sort of which is the more relevant one. Before I answer that question, I decided to look at it a different way. And these are very rough numbers. If there's any statisticians here, they'll object to them because I was adding apples and oranges and all sorts of things. But the top row here is use of faster payments on a per capita basis. This is total population, not adults only or anything like that. And looking at, as you can say, the US and the UK over here, and then systems with countries, Brazil, India, and Kenya, just to give an example. On the lower roll, I included card payments. Why did I do that? Because card payments, technically, obviously not the same as faster payments, but practically they're the same in the sense that card payments in the United States are the way we make immediate payments. Right? We just happen to do it using old technology. It was the technology that was right 20 years ago when those systems were put in place. You know, if we had to start from scratch today, we wouldn't build card networks. We'd do something like faster payments. But it shows the rough kind of volumes per person that are available in a market. And look at the number in Brazil. I'll show you another chart in a moment that, you know, look at Brazil and India with those numbers when you're starting to combine. It's really pretty interesting. So back to the question of what to do to support the growth of Raast. These are the tough questions. Suhal, you knew this was coming. Job number one, the most important the thing that you have to get right, more important than anything else, is to be ready for the volumes that are coming. So operating a high volume retail payment system is a very, very tough job. Saul knows what this is too. You know this, but the volumes can ramp up very, very quickly, astonishingly quickly. Everybody who's involved in this has analysts who's projecting volumes. Sometimes it's almost hard to believe what they're showing when they show their dramatic possible increases. When you add merchant payments to the mix, there will be spikes in volume that are even more alarming because the spikes happen on predictable days, and merchants have and consumers have close to zero tolerance for downtime. And somebody's smiling. They've been through this for failures on payments volume. So this is a have to have. You have to be ready operationally for the volumes that are coming. The other 2 points are also important, but a little bit more complicated. Let the market find the system. What do I mean by that? I mean, if you accept that there is a market there, that there are people and businesses that want to use this system, and that you basically have the right system, that you don't need to force, you don't really sort of need to sell the system. You just need to let the 2 pieces find each other. So what do you need to make that happen? So I'm going to talk about several different things here, but they're going to share a common set of issues that we have learned painfully in the U.S. and really around the world in the card industry over the last 15 years or so. And these are these 3 attributes of simple, open, and easy that I'll keep coming back to. But I'm going to talk separately about them. One is brand. Brand is incredibly important. Anybody here in the marketing domain? One hand, that's not enough. You need more people in the room. Brand is really important. By the way, I love the Raast brand. It's very good. And Wakas, your team did a survey recently that included awareness of Raast brand, and we were talking about it. Was it 11 or something? There was a good percentage of initial awareness of the Raast brand, which is great. But there have been several instances of failure to thrive of payment systems that were instant payment systems that were launched with good brand efforts. The problem is launch is not enough. Brand needs continued promotion. And I'm going to highlight, and I feel bad about it because I loved this little system, but I'm going to highlight the Modelo Peru. Do you remember them? They were great, and Carolina was great, I loved this little system. I don't even know if it's operating anymore. I was looking them up the other night, couldn't even find anything past 2016 about them. But they were caught in a classic trap where the group that was running the payment system, after the initial launch, they thought the banks were going to promote the brand. The banks thought the central group was going to promote the brand. Nobody promoted it after the initial bunch of videos and ads. I'm not saying that's the entire reason that every system that collapses has its own sad story, but I would say that was a contributing factor. Another example of a system that failed to thrive, it's still up and running, but I diagnose it as having failed to thrive, is Mexico's SPAY system with the Coye overlay. There's, again, a number of different reasons you can say for that, but that again is one where they had all kinds of cute cartoon videos on the central bank website and stuff like that. But I remember 3 or 4 years after that system launched, I was visiting the head of Visa in Mexico. He had never heard of the system. I thought that was kind of interesting as a point, I just, so enough of a point, but you really just don't, you should make sure that your brand people, those of you who are with banks, you need to make peace with your brand people, that the idea that there's co-branding or whatever you're going to call it, that they need to get used to the idea. Anyhow, it matters. Let's just work through these. Rules. Rules can be a huge barrier to adoption. Okay? Famously, 20 years ago, in the United States, when Visa and MasterCard were still bank-owned private associations, merchants were asked to sign merchant agreements in which they promised to follow rules that they were not allowed to see. That is no longer true, but the rules are still ridiculously complicated. They're now public. You can now go in and see those rules, but they're still ridiculously complicated. The trend is among payment systems is for rules to be getting simpler, shorter, and more open. Anything that a payment system can do in that direction is better for the adoption of the payment system. Much better. And let me just show you a quick example. I'm going to skip ahead here. So I was very disappointed to see that our FedNow system is doing it the old-fashioned way. Look at this, 122 pages, dated September 2022, version 1.0. Okay, so every time they want to change one little bit of a rule, they're going to have to change the whole 122-page document. I see lots of frowns. Who wants to hire somebody to read that document for them? Just throw yourself out of the window right now, right? This is not the way you want to run a payment system. Here's my friends in Brazil. They've got a law that's the basic frame that's on their website. And then they have separate documents. One's for the security manual, one's for the penalties manual, one's for the dispute resolution manual. Each one's separate. It looks, I'm not enough of an expert, I'm sorry, but it looks like you're going in that direction with separate circulars, That's good. That's good. And the extent to which you can make them understandable by a layperson, even better. Simple, short, easy. Really, really important. You wouldn't think it would make such a difference, but what we've learned is that this is part of when I say let the market find the system. Okay, so you don't have to have an expensive acquiring labor force whose job it is to explain the system to the market. The market can read the documents and figure it out themselves. That is really important. Okay. Same thing with APIs. Now, have most people have heard of or met with or know about Stripe? Yeah, at least some nods. You know, Stripe has been astonishingly successful, right? I mean, their market success has just been amazing. And in the early days of their success, I was sort of fascinated. I couldn't quite understand what they did. I didn't understand why they were so successful, because it seemed to me that functionally what they were doing, what they were offering clients, wasn't that different than what the big incumbent processors had to offer. The big incumbents were doing the same thing. And I kept saying, well, like, I don't get it. Why are these guys so successful? So they were wildly successful. And so I actually had a team of people going out and interviewing some customers, saying, like, what's going on? You know, I didn't. You know what the answer was? Overwhelmingly, people were coming back and saying they had better documentation. And I was like, what? And I see somebody nodding. Their APIs were better documented. The coders at the clients, because their clients were mostly online merchants, the coders could understand what they were supposed to do. It was, you know, they went on to be a more complicated company with more complicated offerings and stuff. But in the early days, it was as simple as that. Simple, open, easy. The coders could go online and figure out what they had to do to access the system. And they were hugely successful. And so that's another example of how you can move markets just by making things simple and easy. And everybody thought Stripe had some magic solution. And they really, I mean, it was magic. But it wasn't technically innovative. They just had people writing in clear language. Anyhow, I'm repeating myself. I apologize. Pricing. The same thing. Is the pricing clear and understandable to the end user? Is it published? I'm not going to go more into that, but you can imagine. Now, QR codes. I know a lot of work has been done in your market, and you're getting ready with your launch for merchants and such not. I am not a technical expert on what the right answer is with QR codes. I want to show you another slide. This one's important. This is from a paper done by the BIS, Bank International Settlement. And this chart, this is the one, Dr. Akhtar, that I was talking about this morning. This shows transactions per capita of various faster payment systems years after their launch. So this really tells a story. Green line is Brazil. Look at that. By the way, your friends next door, that's the black line. That's India. Oh, I'm seeing some smiles here. Okay. Look at that. That's what I'm saying, that Brazil should be your model. And from what I can tell, I haven't been down there, but from what I've read and talking to people, what they did is they got the QR code thing right. That it's really, really simple. They have several different solutions depending on who's presenting it to whom and such not. But it's really, really simple, and the end users love it. It works. If you don't get it right, now where's pale green? This is pale green, right? That's Mexico. So Mexico's Coye overlay on their SPAY system didn't get it right. That's what happens when you kind of do a QR code and your consultants kind of work on it with your IT team and you're kind of telling yourself, yeah, I think that works. That looks pretty good. And you're not doing your user acceptance testing with a, hard enough, demanding enough eye on it, and you're not sort of saying, is this really good enough? But if you get it right, if you do the equivalent of what Stripe did, then that's what's possible. And when I want to go back to my clumsy metaphor of the wind turbines, that's what I'm saying. That's not as hard as building wind turbines all over the country. It's really not all that hard. You just have to do it right. So, they have the same exact underlying payment system. You do not have to change Raast to do this. You just have to get the QR code stuff right. So I think, very dramatic, possible. Does anybody have any questions on this one? Yeah. Pardon? This is just their faster payment system. This is the system they call PIX. Now, over here on the right, and excuse me, it's because it's in Portuguese, but this shows on a percentage of total transactions in the market, which systems account for which percentage. And this shows, this is the last two columns are 21 and 22, and the pale pink up here are PIX transactions. So you can see it went from being none in 2020 to being a 29%, I think this is what that says, in 2021, percent of the transactions in the Brazilian market. So when I say that, I think that Raast is the future of digital payments in Pakistan, I think that you can be doing this in a couple of years. Yes?
So how much of this success would you attribute to QR versus some other factors? Because, maybe there will be some other factors as well, and the overall dynamics of the economy and where they are, the payments,
Well, I can't give you a number on that, but I'm going to forward to the Carandas team both the report that this came in and a second report I was reading last night also on that question that broke out how much of it was QR code and how much of it is P2P and stuff. There's more information on that report that the Carandas team can disseminate that can help answer that question. So, it's not 100% due to QR code, but it was an important driver. Yeah. So I think there's a lot of learning. Brazil isn't the only country to focus on. Dr. Otkar asked me that question as well. But I think there's a lot of learning. Because, you can look at a lot of different countries for different reasons. I think I'm focused on Brazil because I think Pakistan is a big, important country like Brazil is. So I think it's good for you to compare yourself to other countries of comparable size. And also countries where the central bank is taking a leading role in the faster payment system. Just 1 second, we'll be talking, I think, later this afternoon. The reason I include countries like Kenya in the mix, and Jake can talk more about this as well, is I'm interested in Kenya in particular because of the adjacency products that have been allowed to develop in that market. But yes?
So what did India get wrong? Why is India doing this?
That is a super interesting question, and I don't know the answer to that. I suspect that complexity is part of the problem. I believe that India's UPI, as much as I'm a fan of it, I think they got a lot right. I do think it's slightly more complicated than some of the other models. And although, they love complexity, It gives you a lot of flexibility. I do think complexity can bog things down. And if you'll bear with me 1 minute, let me say that let me go back to my other slide. Simple, open, easy. The opposite of that is complexity. So if you find yourself going in the direction of, we're not quite sure what to do, let's have multiple alternatives, see the red light flashing and say, if I'm going in the direction of complexity, I may be slowing down adoption. So, okay, yes.
In the successful markets, were the banks doing their own merchant management, or was it their third-party service providers?
Let me answer that this way. Brazil has a very, I hate to use this word again, complex history with third-party processors on the merchant side. So I'm not sure exactly how that played out. I do know that the central bank allowed banks to set their own merchant pricing. I don't know what the processing was allowed or how that played out. You're gonna tell me when my time's up. I have a couple more slides, okay? Okay. Onboarding. I wanted to say we had a lot of conversations yesterday about merchant onboarding. And the card industry model for merchant acquiring and onboarding is a complicated, expensive model. I believe that Raast and other faster payment systems need to create a different model for small business, what I believe you call tier 3 and 4 businesses, that looks entirely different than the card system acquiring model. That's my opinion, and I think that some countries are moving in that direction, and this model would have minimal rules, minimal liability transfer, have to the extent possible auto enrollment, would be inexpensive, not complicated. And even though our countries are very, very different, I do want to say, as an example of the kind of thing that is possible, that in the United States, after years of relative stagnation in terms of how many small businesses accepted credit and debit cards, when Square entered the market, in a matter of a couple of years, they doubled the number of small businesses that accepted cards, partly by introducing the little dongle, that thing, that whole thing, but also because they introduced auto enrollment and more efficient methods of managing credit risk exposure under the rules, and it gets complicated, so I won't go into the details. But they took a new approach to things. They made it easy, fast, and simple, and they totally changed the market overnight. So it is possible. I would urge you to avoid falling into the trap of applying the card market merchant model to Raast, merchant account management. So that and let's look at what Brazil did and see how they got that line going up right. Okay. So just take a look at what's next. Okay, only a few more hard things to talk about. Install and maintain market confidence. Easy, right? We already talked about the first bullet. Keep the system running reliably. I worried about the wording of the second. Encourage a healthy economic framework for marketplace participants. What exactly does that mean? As I said, I started out life as a banker on the corporate side. And when I started out, there was no payments business. I was a banker at Citibank. At the time, it was the largest global bank and quite profitable, thank you very much. And the transactions that we ran for our clients, checking, ACH, wire transfers, were simply service that we extended for our clients in support of the larger relationship lending, sort of other businesses we did for our clients. I believe that, financial institutions in markets such as yours, may find places where they have profitable businesses related to Raast transactions in some cases. But I think in the long term, financial institutions' success related to Raast will be primarily through relationships with the businesses who grow and prosper, in part because of their use of Raast. I think that Raast will allow small businesses to grow and prosper. Small businesses will be able to show evidence, data evidence of their sales. This will allow them to tap into sources of credit and grow their business. They will start having balances in their account. This is the whole ACT framework that I know the Gates Foundation talks a lot about. I really believe in that. And I think financial institutions will have increasingly profitable relationships with these customers. I think that will be a more important piece for banks than will be a strict transaction revenue model related to faster payments transactions. That's my opinion. But I think every market will be different. I think within a market, different financial institutions will find different pockets and different situations within their markets. The third bullet here, manage data security and fraud to acceptable levels. So that's all you have to do, right? You're never going to get rid of it. You just have to have it managed to acceptable levels. But you do need to do that in order to keep the confidence of the market, both consumers and businesses. Security, fraud, and privacy, obviously closely related topics. This is my view of it. Everybody loves to categorize these different things. I think that security, particularly cybersecurity related stuff, tends to be harder issues, increasingly challenging given, everything that's going on with cybersecurity, and God knows what's going to happen with artificial intelligence. Very challenging, but actually in some ways not that hard to manage, right? Because you're just hiring the best, cybersecurity people that you can get. They tend to be the same people regardless of industry. It's not that payment specific a task. You've got generic security standards that your institution is following. Privacy is sort of in a mid-ground. The only thing I really want to say here about privacy is I don't think that privacy in data it used to be the use of data issues was very focused on payments data, like 10, 15 years ago, at least it was in the US market and to some extent in the European market. We are no longer the focus. The real focus on data privacy and stuff has moved away from the payments industry, so we're sort of like following other stuff. Fraud is less intellectually difficult, but much harder to manage. And it is much more payment specific. And so that is very much our challenge. The bad news about it, obviously it's continuous, it's relentless. It runs the gamut from the highly technical to the not technical at all. There's bad actors everywhere on the food chain. There's a saying we use in the U.S. market. There's an old bank robber from the Wild West days, Willie Sutton, who was quoted as saying, "Why did he rob banks? Because that's where the money was." So, why do fraudsters, come to the payments industry? That's where the money is. They always have been, and they always will. So I do urge everybody who's involved with Raast to recognize that this is a payment system at its infancy. You can always predict payments fraud. So you have a low volume right now. You should have teams of people predicting what's going to happen when the payments volume increases, because the fraud is going to increase, so you should be ready for it. The really disturbing fact is that those card economics that I was deploring before, the one good thing about them was that it had enough money to cover the cost of fraud. The bad news is there's not going to be enough money to cover that in instant payment systems. So there's going to need to be some collaborative thinking about how we're going to cover some of the fraud. Whether we had an interesting session with the fraud managers yesterday afternoon, and some interesting talk about should that be through sort of pools of funds or escrow, or there's room for some good collaborative thinking there, but work needs to be done to figure out how to manage fraud in this industry. Yeah, I will point out that you can't ignore it. One of our instant payment systems in the United States that's been up and running since 2017 tried to just ignore the issue of authorized push payment fraud on the grounds of it's the fault of the person who sent the money. We're just going to ignore it because you shouldn't have sent money to a scammer. And the fraud spiked enormously, and the banks and the company just got creamed in the Senate because they weren't doing enough to prevent and control it. So you have to be ready for the fraud, and anyhow, it's just an example of what can happen. The good news about fraud management is that collaborative management works very well. I understood from talking to the fraud managers yesterday afternoon that there already are some forums. You probably need to strengthen those, talk about whether there are good grounds to do some shared investment in fraud databases and shared investment in fraud algorithms and systems to manage fraud. So there's that. One final thought, an interesting side effect of the governance structure of the card networks in the U.S. market, which was a very complicated set of committee structures and boards of directors and such not, was that we ended up creating this huge community of payments people who had sat on all these committees and boards. And it created thousands of people who knew about how the card industry worked. Many of them went on to create startups later on. And so there was a lot of value in that. You ended up with a lot of people who really understood the industry. And so there are other ways of creating a payments community, and I would encourage you to consider ways of making sure that people who work in your institutions understand Raast and participate in various ways in the growth of this payment institution. So again, thank you very much for your time today.